Hello and welcome. I hope that you are having a fantastic day. Today we have breaking crypto news. Global financial meltdown affects cryptocurrency prices. So on our channel, we're going to give you crypto investing ideas that will help you take profits and avoid losses. So let's get right into it. Can we get 99 likes on this video? Smash that like button. It really helps us out. I'm not a financial advisor. This is not financial advice. This is my opinion. Now, there's a silver lining for Bitcoin amid a global market panic and altcoins purge estimated. So as the global stock market saw a massive sell-off overnight, crypto assets also fell sharply, with Bitcoin and Ethereum recording double-digit losses over the past weekend. However, some industry observers claim that crypto's mainstream moment as a utility might finally be here, but early-stage projects with limited adoption might become ghost towns. As of press time on Monday, which was 8:45 Universal Time, Bitcoin slightly recovered and is down by 8.6% to a price of $7,998 US, while Ethereum is down 9.5% to $208 US. Many smaller altcoins from the top 10 are seeing even bigger losses between 9 and 14%. And so you can see by this chart quite a number of different prices, a lot of different losses, anywhere from 12%, 13%, 12%, with coins like Bitcoin, Ethereum, Litecoin, EOS, Binance, Tezos, etc. And so really, the big thing to note out of this is that although the debate of whether Bitcoin is a risk-off or risk-on asset continues, most analysts agree that it is above all uncorrelated asset. In other words, it doesn't necessarily respond to what the rest of the market does. Sometimes it'll go down and sometimes it'll go up when the rest of the market is melting down like it has in the last 24 hours. However, when we still see selling during stock market panics, it appears likely that the majority of selling is caused by investors who are forced to raise cash in order to cover losses in other markets. To avoid margin calls, these large investors will, in other words, sell anything they have, and that includes safe havens like Bitcoin and gold. The same explanation was highlighted by several crypto market observers, saying that investors have no choice to sell. Crypto is down because traditional investors need to sell assets to cover other positions that are getting wrecked. Additionally, some also pointed out the fact that more institutional ownership of Bitcoin also means more selling during stock market panics. I've never bought into the idea that Bitcoin will prove to be a good, uncorrelated asset in a downturn. And so, that makes a lot of sense. People have invested a lot of money in Bitcoin, but they also have investments in other things. I've heard that most institutions are thinking in terms of putting, 1% of their total assets into Bitcoin. And so it's a small percentage. But if they're in a situation where they've got to do anything and everything in order to get money to pay off other problems because they've over leveraged in other markets, then they'll sell their Bitcoin in order to pay their debts elsewhere. Or gold or other safe haven assets. They'll sell things off in order to pay debts that they owed. Another area that caused last night's meltdown is liquidations of leveraged accounts. So a leveraged account is, as a trader, if you had $1,000, you could actually use $1,000 to buy $100,000 worth of Bitcoin. And if you own that $100,000 and you made your bet at the right time, you can either go long or go short on that $100,000 leveraged trading bet. Going long means you're betting the price is going to go up. Going short means you're betting the price is going to go down. And that $1,000 can buy $100,000 in the market. The problem with that is if the market goes the wrong way and goes beyond your initial investment, in other words, if you're putting $1,000 out there and the market goes the wrong way, once you reach $1,000 loss, then the exchange will automatically sell your position and take all your money. So if you had $1,000 out there, you could lose that 100% of the $1,000 just because you saw a $1,000 loss. If you took $1,000 and used the 100x leveraged opportunities that have been out there, then as soon as that $100,000 bet only shows a 1% loss, you've lost all your money, 100% of what you invested in it. And so that's what was happening, is leveraged traders lost over $259 million last night in the last 24 hours, while people who were having shorts, so the longs really got cleaned out, and the shorts also got cleaned out, but only to the tune of $10.3 million. And I'm sorry, that wasn't just last night, that was over the last several days, but you can see that the bulk of it happened within about the last 24 hours or so. So anyway, $259 million went into the pockets of the cryptocurrency exchanges. In this particular case, it was BitMEX. And that's really unfortunate because leveraged trading is extreme. I mean, cryptocurrency is risky on and of its own, but leveraged trading is extremely risky, and a lot of people lose a lot of money because they're over leveraging what they're betting on. The last thing that I wanted to cover in terms of this market carnage, as everybody's wanting to quote and be quite dramatic about, is this key metric shows Bitcoin remains bullish. Now, before I get into what this particular metric is, I do want to talk about, you know what? Nothing's changed about Bitcoin. The halvening is still going to happen in the middle of May. The reasons why Bitcoin was a good investment to begin with have not changed in the last 24 hours. The only thing that's happened in the last 24 hours is there's been a whole lot of fear. That fear is driving prices in an unreasonable way. And the reality of the situation is this actually might be a good time to be purchasing cryptocurrency and Bitcoin. We may be seeing a low before Bitcoin sees its bigger rallies. Now, that's just my opinion. That's not a financial advice. And I'm not 100% confident in that opinion. I'm going to watch the markets because they may still go lower. So at this point, I think it's too hard to tell for sure what direction the market is going to go. But I think we're entering a opportunity where we could see a good price to buy in at. And so, because we could be experiencing a fire sale, literally. Bitcoin difficulty remains in an uptrend. Now, what is Bitcoin difficulty? It has to do with the way miners work. When Bitcoin difficulty increases, it makes it more difficult for the miners to solve the problems they need to solve in order to add blocks to the blockchain and receive the blockchain rewards. Now, this difficulty is automatically adjusted so that it helps all miners get an equal amount of money, and it also helps prevent the blockchains from getting added too quickly. And that sounds strange, but there's a particular pace. They want to keep the thing so that a new block is created approximately every 10 minutes. And so when a whole bunch of miners enter into the network, that increases the amount of power happening or the amount of calculations happening on the Bitcoin network. And blocks could get added at a much more rapid than one every 10 minutes. And so the software, the Bitcoin program, is written in a way that it self-adjusts so that it maintains a set pace of one new block every 10 minutes. And that adjustment happens, I think it's either 1 week or every 2 weeks. I don't remember the exact timing on that automatic difficulty adjustment. But it automatically adjusts itself so that the number of blocks added to the blockchain is consistent. And what we're noticing is the difficulty. So in spite of recent weakness in the cryptocurrency market, the difficulty of the Bitcoin network, how hard it is for miners to solve blocks, is about to see a gain of 7% when the algorithmic adjustment takes place tomorrow, which I think is actually today. Plan B, the pseudonymous analyst behind the famed stock-to-flow model, recently shared this bullish statistic, currently an estimate, although it is unlikely to be wrong, writing that there is no sign of weakness 2 months before the halving. In other words, the number of miners that are on the network doing the mining have not been decreasing, it's been increasing. And it's increased enough that it's forcing a 7% gain in the difficulty of Bitcoin mining. And so there's actually been a flood of new miners hitting the cryptocurrency market. Well, the growth in hash rate, which leads to the growth in network difficulty, suggests at least two things. Bitcoin miners are confident in the long-term success of cryptocurrency, especially in terms of price, and they allocate more resources to the security of the network. Number two, the technology of mining machines is being improved on, resulting in the increase in hash rate. Finally, strength in the mining ecosystem has historically coincided with the price action. And so you can see here, the gray line is the price of Bitcoin as it's gone up over history. And this is not a normal chart. This is what's called an algorithmic chart, because you can see here at this point, you're looking at $1. Here's $10. Here's $100. Here's $1,000. And this mark is 50,000, and that doesn't make sense. This mark must be 20,000, and then this mark must be 100,000. Oh, this mark would be 10,000. Yeah, that would make more sense. And this mark would be 100,000. So 1,000, 10,000, 100,000. Anyway, you can see here the last in this gray line, the last all-time high of Bitcoin where it actually hit $20,000. And this red line seems to almost duplicate exactly where the price of Bitcoin is. Now, during the last bull run up to the $20,000 price, you can see that the red line was below. And then during the drop in price, the red line went above it. And now the red line is right on the verge of matching this gray line until last night's dip, where it definitely dropped below again. And so right now, the two are very, very close together. And as the price goes up, anyway, you can see that it's correlated, that the hash rate, which is this red line, matches very closely to the actual price of Bitcoin. So I think we're still, I think the long-term future is still very, very bright. I think that that Bitcoin is a great opportunity, that today we're having an opportunity that we may never see again. It's possible we could be seeing a low in the Bitcoin price that maybe we'll never get to again. It's also possible that it still could go lower. Anyway, that's the news for today. I hope that you enjoyed it. How can I be of service to you? Please leave your comments below. I'd love to hear from you, especially if you disagree with me. Look, you know things I don't know. I know things that you don't know. And when we share what we know with each other, we'll grow smarter together. I'd love to grow smarter together with you. Please share your polite disagreements down below. In the meantime, like, subscribe, and hodl. And I hope that you have a fantastic